Hello everyone, this is Saeed Daemi CPA. I'm a certified public accountant here in Dallas. Today I'd like to talk about Tax Cuts and Jobs Act of 2018. This is the most complicated and extensive tax law changes in over 30 years. We know this is a big law, but in this video we will highlight the major changes of tax reform provisions that will affect individuals in case you were wondering if and how you are impacted. Tax rate brackets modified and generally lowered. The legislation replaces most of the 2017 marginal income tax brackets with corresponding lower rates. The new law retained the existing 7 brackets and simply reduced most of their tax rates by a few points. The standard deduction increased. The legislation increases the standard deduction, and for single filers, deduction increased to $12,000. The deduction for married and joint filer increases to $24,000. The deduction for head of household filers increased to $18,000. Personal exemptions suspended. The Act eliminates personal exemptions. Before the Act, taxpayers subtracted $4,150 from income for each person claimed. As a result of the new legislation, some families with many children will pay higher taxes, despite the Act increased the standard deduction. Itemized deductions modified, such as state and local taxes, mortgage interest, charitable contribution limits, and etc. State and local taxes. Taxpayers can deduct up to $10,000 in state and local taxes. They must choose between property taxes and income or sales taxes. This will harm taxpayers in high tax states such as California or New York. Mortgage interest. The Act limits the deduction on mortgage interest to the first $750,000 of the loan. Interest on home equity lines of credit can no longer be deducted. Current mortgage holders aren't affected. Medical expenses. The legislation allows taxpayers to deduct medical expenses that are 7.5% or more of income. Before the bill, the cutoff was 10%. The Act repeals the Obamacare tax on those without health insurance in 2019. The Act eliminates some other deductions such as moving expenses. Except for the members of the military, it keeps deductions for retirement savings, student loan interest, and charitable contributions. The law increased the income-based percentage limit for charitable contributions to 60%. Planning for many taxpayers will now be to make charitable contributions every other year. The legislation disallows all miscellaneous itemized deductions that are subject to the 2% floor under previous law. Child tax credit. The Act increased the amount of child tax credit to $2,000 per qualifying child. The maximum refundable amount is $1,400. The Act also created a new non-refundable $500 credit for qualifying dependents who are not qualifying children. This credit helps families caring for elderly parents. Net operating loss carry forward and carry back modifications. Under the old tax law, you could carry back the amount of the NOL to 2 years before the NOL year, and then carry forward any remaining NOL for up to 20 years after the NOL year. Under the new legislation though, NOL carrybacks are repealed. NOL carry forwards will no longer expire, but the carry forwards can only be used to offset 80% of taxable income. We are here to help you with all your tax questions considering the new tax law. Please don't hesitate to give us a call if you have any questions or need tax advice.